I want to thank you all. Thank you all for being here today. By the way, my name is Joseph. Thanks for sticking around with me here on a Summertime Friday. Thanks for spending your Summertime Friday with me. Now, boy, we've made some great money today in this room. I want to recap how we've been doing here so far. Now, it's 10:45 this morning, 10:45 a.m. on a Summertime Friday. Remember our strategy for a Friday. What do we know about a Friday? Well, first of all, we know that a Summertime Friday is going to be get in early and get out early. After 10:30, 10:45 on a Summertime Friday, we're really concerned that this price action is going to go to sleep. Now, if it wasn't the summertime, we'd still be concerned about this, but it wouldn't be till about 11 o'clock. So we're going to be about a half an hour earlier on a Summertime Friday. And remember, Summertime Fridays are going to give you those periods of great personality and periods of not so great personality, right? This was a great example today on crude oil of what a Summertime Friday looks like. You can see the speed. The speed has not been consistent at all today. I'm going to tighten my stop up here, guys, to 73. 73 my stop. 73 my stop. I'm going to trail the stop here below that support. Remember, resistance, it was at 92.78. That now becomes support. So we've been calling trades live in the room today. We've been trading right along with our guests and our members this morning. And I'm just providing our members and guests right now with some feedback on where I'm moving my stop to. The personality in the market this morning on crude oil did make it a little bit challenging. There was one trade today where I took the trade and I just got in too early. And then later on in the process, the trade pattern set up again. I got in too early the first time, but then we got the big speed the second time. I took it a third time and got scratched out, +5, -5. And then here was my most recent entry for a +5, +15 winner. So we're doing a great job on this. Now, here on crude, we're in this trade long on crude. And if I recall, about a half an hour ago, I began giving you entry points on crude oil, right? So we've been here on crude for the past half an hour. We've all been long. As I've said over and over again, I am long the crude and I'm staying long the crude for one simple reason. This is something you won't see me use very often. This is one simple chart on crude oil that I've nicknamed the floor chart. And the floor chart, what the floor chart does is it only shows me between 9:30 and 4 a.m. I'm sorry, and 4 p.m., excuse me. Right? So my floor chart only shows me from, well, on crude oil, from 9 until 2:30. If this was the Russell or the E-minis, it'd be 9:30 to 4:15. I'm sorry, till 4, excuse me. All right, if this was gold, it would be 8:20, right, to 1:30. Okay, so this is a floor chart. It's also called a pit chart or a gap chart or whatever you like to call it. Go crude, go. Go crude, go. Man, we need crude to do this for us. I am so proud of you members and you guests out there right now. We got guests making money. We got members cleaning up here. Man, great work. Okay, so we know this is called the floor chart. And by the way, my target on this on crude oil is at 93 even. Now, how did I get my final target on this? It's all because of this floor chart. So yesterday here, and again, we're talking about crude oil right now. I know that the low we closed at was right about 93. So 93 even was just about where we ended yesterday at the end of the morning session on crude oil. Look where we showed up this morning. This morning we came out and wait a second, we're down here at 92.50, right? That's 50 ticks. That's 50 ticks of room between where we closed yesterday and where we ended today. Now, hold that thought. Fast forward till 9 a.m. Guys, my stop on crude is at 73. 73 is my stop on crude oil. I'm locking in all the profit here. I'm not risking this runner. Now fast forward to 9 a.m. on crude. In comes our opening range. Our opening range on crude oil is very important because crude oil is still one of the only markets out there that the pit, the actual open outcry pit, is still very, very, very much active in control. Now, a lot of pits, a lot of floors, a lot of trading floors, right, where you see the open outcry, the yelling and screaming, right? We all know what that looks like. We see them on TV. Well, those are facing extinction right now. But there are a few markets out there that are still lively, kicking and breathing in the pit. And crude oil, natural gas, the S&P, which has its days numbered, those pits will be going away. So we're going to use the opening range because that's a pit trader type of thing. And what we said was that this is perfect. If we can break out of the opening range, we go into a gap and we can fill that entire gap. And so that's why we got long on crude. We also used a technique which we call the dollar correlation. Remember this morning, folks? Does anybody remember what we talked about this morning, the dollar? The dollar was perfect because we found that channel on the dollar, and our exact words were, if this dollar falls off the top of this channel, we're going to go long everything. We're buying everything. And that's exactly what happened. Right? Look at the DAX right now. Look at gold right now. I'm sure every market has jumped. Now, we chose to trade the Russell and crude oil in this trade room, but this method applies to anything you want to apply it to. So we use the dollar correlation to tell us that if the dollar fell off those channel highs, we want to be a buyer. But I can't just default and buy. I need to wait for a pattern. The crude floor chart really made that possible because now I knew we broke out of the opening range, buy. Now I knew bullish gap, buy. Dollar correlation, buy. Final target at the highs of the gap, and we'll let it run. Let it run. Now what I have done is I have used this dynamic support as a trailing stop. Okay, so 73 is my trailing stop, and look at how accurate that was. It went one tick from my stop. Now I'm not going to jinx it too much I don't want to toot my own horn too much here for that stop because it could come right back down and stop me out here. A wise trader stays humble at all times. But basically what happened was I used this red line here. That red line is, well, it was resistance because it was overhead. Well, now that becomes support. And so where will the trade become invalid? That's where my stop needs to be. Please be aware I could also use the 92.65 as well. But because it's a summertime Friday and because I did take a loss this morning, I have no choice. I can't use a really, really wide stop here. So please be aware, though, that I can place my stop loss either below the red line or the yellow line. And as I said earlier this morning, it has a lot to do with what type of day I've had. If I've had a really profitable day, then I can afford to lose a little bit on the runner to try to stay in that trade. Rookies, all the new traders out there, I highly encourage you to always err on the side of caution. Always, always err on the side of caution. I'll tell you one thing, I'd rather be in a trade, I'd rather be sitting on the sidelines wishing I was in than being stuck in a trade wishing I was not. So be conservative with your entries. And then when it comes to profit targets, remember a Friday is nothing like any other day of the week. So when it comes to profit targets, we take them consistently, nice and conservative. All right, we're not trying to get too greedy in every trade. I know that nickels and dimes at the end of the day, the week, the month, the quarter, the year will add up to big, big dollar bills or maybe euro bills. I want to thank you all for your time today. Don't forget, we have that special going on right now. We told a bunch of you guys yesterday about this. We have a special right now. We're giving away our trading computers at 50% off this week. It expires at the end of the day tomorrow. We built too many trading computers. We have an excess of them in our office, and we're giving these things away for half off right now with membership. So I can either give you the biggest discount we've ever had on computers, or we're also throwing out a tremendous discount on our advanced membership, and that expires tomorrow evening. Whether it be a new trading computer or a lifetime membership, we're looking forward to working with you guys next week. Now, if you're in the summertime right now trading with me, this is the best time to learn. Why do I say that? Why is the summer the best time to learn? Because if you wait till the fall, you're going to be missing out on the best time of the year. It would be like not going to preseason for soccer season, right? Getting soccer players here or football. Okay, what if you didn't start practicing in the summertime? By the time the fall came, you wouldn't be ready for the season. So remember, we have to make sure that we're ready for the best time of the year. After Labor Day, we're going to be doubling our income. That means right now the markets are a little bit slower. Right now the markets are really great teachers. Today was a great learning example. We cut some losses early today to protect capital. We got back in on a re-entry to follow the plan. Today on the Russell, we decided not to sell short on the Russell at the lows. We bought it. And on the Russell, I gave you the exact entry point on it. Entry points, targets, stops, it was all provided. This is the best time to learn. Come the fall, while you're learning, you're missing out on valuable profit. All right? I can't wait for after Labor Day because my income always doubles. Now, we're going to stay in this trade here on crude oil till we hit 93. I would encourage everybody to be patient. Keep that stop right now at 73, and I'm going to keep hanging out and letting it run. Excellent week this week, everybody. Excellent Friday so far. Congratulations on your profit today. And don't forget, we're going to come back here on Monday morning, too, at 7:30 a.m., 7:30 every morning.